So today I will show you how you can protect yourself shorting small cap stocks. So this is my platform, smallcapdilution.com. We provide dilution data for 1,000 stocks, as 1,000 small cap stocks, and we'll continue to expand in order to cover all of it, all small cap stocks that have market cap of 500 million and less. So if you want to know more about the platform, you can check the previous video, but this video will be more specifically just to show you how you can protect yourself while shorting stocks based on dilution metrics. So today's kind of case study will be about ALP. So ALP owns and operates AI infrastructure. It doesn't really matter, company overview. We will dive into the more technical stuff, but in my platform you can see company overview and you can see all sorts of dilution metrics, liquidity, offerings, instruments, reverse splits, and filings. As well as with the premium subscription you have a chatbot which you can literally ask any question about when do these warrants become exercisable, are these warrants approved, has the stockholder meeting for the warrants already happened, any question you would like about the stock and its dilution or liquidity aspect. So moving further, what I wanted to show you today was ALP and kind of, where is it? And specifically its price changes. So let's go to the date of the news. So basically ALP has a 400 million ATM for a stock with a public float of 6 million, which is ridiculous. That means they can dilute you literally however much they want, right? So this is a very big red flag. Just the 400 million ATM. Of course they cannot use it because they are limited by the baby shelf, so they cannot use it all at once, but still it means they have so much headroom and so much possibility to dilute you. So yes, they filed a 400 million ATM. Keep this in mind, this is an important dilution metric to why people would want to short the stock, right? So what I wanted to show you is, okay, there you go. It's hard to remember everything. So price rose on May 21st. So if you go to May 21st, so yeah, after May 21st, price rose a lot. And the reason is because they announced a contract and they projected 21 million revenue. And on May 27, the acquisition closed. So the silent killer in this case, what could really dilute you, is they have a 400 million ATM in February 17th, and from what I remember, they haven't really disclosed selling almost any of the ATM in the past prospectuses or 8Ks that they have submitted. And it's 30 to 40 times their market cap, the ATM size. Okay, so how I want to kind of how you can protect yourself when trading these dilutive events is that, yes, we had good news, right? Those are not long-lived news that they're expecting 21 million revenue. You have to look at their profits and what comes out of it. But okay, so they announced that they were going to get 21 million revenue from the new deal. So yes, price rose quite a lot, around 50 to 60%. So people see this price rising, and because of the 400 million ATM, it's sure that the company is likely to sell against this upside momentum in order to raise money. And these news can be well put around this time where they have it prepared and they have a system prepared that they will sell those shares when these good news come out, right? So people can be inclined to short the stock, right? Which is normal. That's a short, of course, is dangerous. This is probably a Chinese stock, maybe not, but as you can see, it has these very, very rough price movements, meaning that they do liquidate people quite often in their pump and dump schemes. So that's also something to be very aware of. But what I wanted to say is that if people are looking to short the stock because of the dilution, and yes, of course, they will use as much of the ATM as they possibly can, as they want to raise money, and that's what these stocks do, right? So knowing that, we know that we're going to have downside selling pressure, and for it, we need upwards momentum, right? So um, something to be very careful about is if you would place a short trade, you can well enough be liquidated, and I'm going to explain to you why now. So first of all, something that can show you that they're selling off the ATM is that they have over 54% of the volume was done off exchange, and this can be very likely that the company's agent is selling the ATM shares into the buying pressure. So seeing that 54% of volume is off exchange is already a good clue. Um, and second of all, you can see highest volume is at 0.45. So it's around, you can see that there would theoretically be a lot of upside pressure as well. Something that you should look into is that people would see that the deal finished exactly on the open market of 27, and I'm assuming this candle liquidated a lot of people because you'd have retail buying at that point, thinking that was a positive catalyst, while off exchange you had ATM shares being dumped into the market, right? And another thing is the short side trap. So borrow fee spiked to 61 to 63%. This is a lot. This is a lot. This is very high. And although although it's not, because it's 63% yearly, so you would divide it by 365 days. It's not a crazy amount if you're investing small, but what I use the borrow fee to show is how many people actually want to short the stock, which is a lot. If the borrow rate is this high, it means a lot of people want to short the stock. Knowing this, knowing that a lot of people want to short the stock, what you have to be careful about is about institutional buying. So something that you would have to look out for is if you have so much people shorting the stock, all it takes is one institutional buyer to really purchase or long a high amount of shares. It could drive the stock price up, and it could make these short traders have to close their positions. When they close the positions, they have to buy back shares, and this would increase the stock price to a very high amount. So this is something you have to be really careful with. I'm not saying this will happen, because theoretically that institutional buying is kind of theoretical. You are assuming it can happen, and it's always good to have it in the back of your mind, but also it's theoretical, and if the institution would actually buy, you also have likelihood that in turns, again, the underwriter has the ability to pump more or sell more ATM shares into the market, right? So this was just kind of a slow, brief video on how to not lose all of your money trading small cap stocks, because first of all, you look at my platform, small cap dilution. You would look at what what ATM they have left. Also, you can look at pre-funded warrants, but pre-funded that's old. So you would kind of see that they have 400 million. 50 million is from a previous ATM, but you should keep in mind the new ATM. Of course, you have to by yourself go and recheck. It's to make sure that that you're looking at the correct things. So this is the one that's active. This one is probably terminated. So yes, they have a 400 million active ATM. You can catch it within live dilution. I mean, that happened in February, but you can catch this event here. You can go and you can kind of then wait for the positive catalyst, which happened for the ticker, what's ALP happened recently, the new stream of revenue, and then you can keep an eye out for a short, right? This is what a lot of traders do. But you have to be very careful of getting kind of squeezed out. And this is what this video was about. So for people who trade stocks looking at dilution metrics and seeing that the company is likely to dilute, has diluted investors in the past, and you want to short to make money this way, you have to be very careful with the short squeeze. So you have to look at how much volume is being traded off exchange. This helps you understand if there's institutional trading, and also ATM, or not ATM, but the company is using their dilutive instruments, which is usually done off exchange. And then you can look at borrow fee as well, and this is all for free. Borrow fee, just to kind of get a view of how much people are actually shorting the stock. So theoretically, like logically speaking, if a lot of people are already shorting the stock, it means you're not the first one to get there. You haven't found the gold mine, and you're probably not going to make any money. So yes, so it's very complicated within small cap stocks. So there's so many things you have to look out for. Our platform simply helps you identify dilution. You can use it if you're an investor who looks at small cap companies and decides to buy them because they see potential, they see upcoming kind of or actually very good product that can actually get be like a 10x, 50x in the future. You can still use our platform to check what is their dilution pattern in the past, and if they're really gonna do the price increase that you're waiting for. Because even though it might be a good product, many of these companies are still small, still don't have very big clients, and their main source of money to invest and to further expand is going to be from, at the end, diluting you and kind of stealing your money. So you can use our platform for almost anything. So this was just a short video to show you how you can use my platform, and I will give a free 1-month trial code in the description of the video if you want to subscribe and get access to Pro, which gives you dilution, liquidity, offerings, gives you this AI chatbot that can help you understand the structure of the capital events in any company, as well as live dilution, screener, and everything else. So thank you for watching, and I'll see you in the next video.